In terms of the expectations, what we've got is a reading of 80.1. The survey called for 75, so that's coming in better than expected and higher than the previous reading of 69.4. So that's expectations. The current assessment at 78.9, a little bit softer than the expectation of 80. The prior reading was 79.5. And business climate coming in at 79.5, better than the survey of 78.5. The previous reading was 74.3. So that's what we've got in terms of the numbers coming through from IFO. But joining us now is Clemens Fuest, president at the IFO Institute. Clemens, delighted to speak to you as always. Thank you so much for joining us today. Can you characterize the climate, the expectations, the assessment behind the numbers?
Yes, I think what we see here is the impact of the easing of the lockdown mostly. What companies say is, okay, our current situation hasn't improved. It's even slightly worse than a month ago. But we think that there is hope for the future. There is, so to speak, light at the end of the tunnel, simply because these restrictions are now being lifted. And that's a good sign. There's a lot of caution here. In manufacturing, in particular, companies say the current situation is really very bad. In trade, in retail, companies say it's very positive that we have been able to open up again, even if there are restrictions, even if the number of customers admitted to the shops is limited, but at least they see some progress. So there's a lot of caution here. But at least the mood isn't as catastrophic as 4 weeks ago.
Clemens, I find it really interesting, the distinction you've just made between manufacturing and trade and retail. And I wonder why you're getting a little bit more positive feedback from trade and retail. I understand that lockdowns are easing, but there's still, first of all, quite a lot of restrictions in place. And secondly, quite a palpable fear of a second wave and further lockdowns.
Well, I'm not sure how strong the fear is regarding the second wave in Germany. It's maybe being discussed less than in other places. At the same time, we have to see that in manufacturing, many markets, France, Italy, Spain, are still closed. So companies really do find it difficult to get started again, whereas in retail, at least the shops are open. They were shut down completely, which manufacturing was not. In retail, shops were shut down completely in April, and now they're opening up again. I think that explains the improvement in the mood. Still, most companies continue to be pessimistic, but the pessimism isn't as strong as it was 4 weeks ago.
Okay, so still pessimistic, but not quite as pessimistic as before. What does that mean for the shape of the recovery, Clemens? In your assessment, does it look possibly like a V or much more like a U or something else?
Well, to me, it doesn't really look like a V. I think there is going to be a quick recovery, but not to the old level. We will stay at a lower level. The Economist has talked about the 90% economy. So it looks like we will stay at something like 90% or whatever, so at a lower level for a longer time. So I don't think it's really a U. There is some recovery, but it doesn't take us back to the old level. The economy will stay subdued for some time.
Okay, makes sense. In the meantime, Clemens, this EU 500 billion euro economic recovery plan, we've had Germany's finance minister Wolfgang Schäuble over the weekend express some support for this. How are the businesses that you're speaking to, how optimistic are they on this recovery plan, both the fact that it comes through and that it has a strong impact?
Well, I think this is being seen as a positive signal, but not much more. It is still very distant. There is a lot of debate going on whether this is going to be spending or just credit to affected countries. The frugal four, Austria, Sweden, Denmark, and the Netherlands, don't like the proposal that came from France and Germany. So I think this is seen as a positive signal, but not more.
Okay. What does this mean then for the prospects for the ECB? Should the ECB expand its bond buying at the next meeting in June?
I think it is likely the ECB will do that. Again, what the impact of that bond buying can still be is an open question. A lot of bond buying has been announced and is going on, and conditions on financial markets, in particular conditions in the corporate bond market, are not the main problem. They have improved. And companies do not have these big problems they had in March in getting liquidity or in getting credit. So I would expect a slight increase in the bond buying, but I don't think this is going to be a game changer.
Right. And what's your assessment then of the German court ruling? Of course, that's one of the reasons that some do think that the ECB might move more quickly and expand the PEP, strike while the iron is hot, if you like.
I think that the ruling is complex. It will restrain the ECB, I think, in the medium term. It doesn't apply to the current measures, but at a very general level, it is a warning to the ECB not to be too aggressive about its bond buying. But the ruling raises more fundamental questions about the EU and the overall institutional architecture of the Union. So I think this ruling does include a number of risks. As far as the ECB is concerned, I think it will force the ECB to be a bit more cautious about bond buying. I don't think there is a strong impact on the current measures, but if we think 6 months ahead or a year ahead, I think the ECB will have to be a bit more cautious.